Do you need a business credit line without a credit check, automate your expense reports, and want to close your books 86% faster? If you're a busy business owner or a CFO, time is something that you have to value. Luckily, there are solutions. Corporate expense management software. Today, we're gonna do a deep dive on Ramp. What's up, winners? My name is Nam. If you're new here, welcome. Here we talk all things personal finance and credit. Start out by subscribing so you don't miss out on any future videos. So as a disclaimer, I am a partner with this company, but I really like the product and wanted to share with you guys. Let's face it, corporate credit cards are the most exciting topic for conversations at a dinner party. Ramp is a fintech company that's given the competition a serious run for the money. No pun intended. If you're an owner of a small to medium-sized business, I'm here to make your day. This service could save you time and money. Ramp is a corporate credit card service built on saving clients from the constant headache of bookkeeping. It's designed to give you control of how your money is managed without all the hassle of complex spreadsheets and troubleshooting. They do all of the heavy lifting for you, and it makes even recommendations on where you can save money, especially if you have staff members who need company cards. Ramp make it easy to manage this by giving you the ability to create unlimited digital credit cards, each with a unique limit. Plus, you'll get access to a suite of powerful tools to root out duplicate expenses. Ramp also offers client rewards like 1.5% cash back on all purchases with no limit. You also get access to deals with a huge roster of partners, which can save you up to $175,000 right from the start. So in today's video, I'll cover everything that you need to know about Ramp, and I'll also compare it to two other competitors that are very similar. First off, let's talk about what exactly Ramp has to offer. Ramp is a free corporate card and expense management platform, but what does that mean exactly? Put simply, Ramp is a platform that helps your business manage money when multiple employees are charging to the company's account. With Ramp, you can issue an unlimited number of credit cards with individualized predetermined amounts. These cards also can be virtual, meaning that they're good for online and over-the-phone purchases. It also gives you in-depth control of all of your employees' cards, so you can set limits and make sure that Kevin in accounting isn't putting too many coffee meetings on his monthly expense reports. This gives you constant insights into exactly how your company's money is being used, with in-depth tracking and ongoing expenditures for every card. With that said, you can put a merchant restriction for each of the cards that you issue. For instance, if you want Kevin to only use his card for Slack, then you can set it as such. And also, if you are new to giving cards to your employees, you can also put category restrictions. This can include gambling sites, entertainment, or anything that you could think of. Plus, you'll get a customized analysis of your spending, including recommendations of ways to maximize efficiency. Think of it as a built-in bookkeeping service that operates on your schedule and constantly working to save you as much money as possible. Are you paying two of the same accounts with the same service? Ramp, they will alert you of any redundancies. Or if your monthly subscription is costing you more than the annual equivalent, Ramp will let you know that there's an opportunity to save money. Bayer is a company that was acquired by Ramp. If you're not familiar with Bayer, they were a company that helped businesses optimize their software and infrastructure bill by negotiating better rates. So let's just say that you have a $100,000 Salesforce bill. Depending on the year, when you signed up, or the sales agent that you use can fluctuate the price that you are paying. Since Ramp now has Bayer data points, Ramp are saving business software bills on their behalf. This could be $20,000, which is a huge saving for any business. So their main goal is to save businesses time and money. So now let's move on to who's this platform exactly for. Ramp says it's designed for small to mid-sized businesses registered in the US. That sounds good on paper, but it really doesn't narrow it down that much. So here's the real scoop. Businesses that are incorporated will be the only ones that can use and be approved for Ramp. So if you're a sole proprietor, you're out of luck with this one. Ramp is designed for small and medium-sized businesses that want to keep their expenses down and build credit, but don't have the time or resources for detailed bookkeeping. Any small business owner will tell you that they spend way too much time on their finances instead of, actually running their business. For companies that need to provide funds to their employees, this could be a great platform to avoid overspending and going out of budget, which does happen quite frequently in companies. So this does not do anyone good, and what's the alternative? Hiring more staff may save you time, but this is a costly expense where software should be a better cost-saving option. All right, that's cool, but what if I'm just a one-man team or just in startup mode, and I don't have a large enough company that runs on multiple team members? How would this make sense for me? After talking to one of Ramp's team members, they say that companies that doesn't really need a corporate card function still can enjoy just using the expense management software just to better organize their books. Plus, you get access to a credit line, and you can use that to build business credit at the same time. But centralizing all of your expenses all on one platform, you can cut hours from your monthly financial management time and spend more time focusing on other important parts of your business. Now let's talk about the employee cards. This is where business owners and CFOs can get a lot of value and insight from their employee spending. Ramp makes it easy to manage employee expenses, allowing you to create unlimited company cards with no additional fees and all with the same rewards. So you can choose the credit limits and track individual spending to ensure no money is going to waste. Unlike some of its competitors, Ramp does not have a mobile app, but it does have some mobile functionality. For example, if one of your employees is about to hit their maximum spend, the manager or even you as a business owner could receive an automatic notification saying that Dwight has 5% left before hitting his maximum. Then from there, you just click on the link on your phone or your email to increase their budget. Additionally, employees can upload receipts via email or text message. Ramp reports that they're matching and verifying 90% of the receipts that they receive. I don't know about you, but sometimes when I get a receipt from a restaurant or a store, I just fold it up and put it in my pocket. And at the end of the day, it gets all smudged and wrinkled. I guess that Ramp can verify and match even the worst looking receipts, as you can see over here. So even without a mobile app, it does have some mobile functionality. Now let's break down the reward system and other benefits. First is 1.5% cashback, which is pretty simple and straightforward. It doesn't matter whether you're buying printers, software, or a company lunch. If you spend $100, you're gonna get $1.50 back. Spend $100,000, you're gonna get $1,500 back. That's pretty competitive compared to other business credit cards. It is reported that about a third of credit card holders, they never redeem the rewards. To be honest, that's actually pretty wasteful. It's kind of like the main selling points of credit cards, which is to get a little bit of passive income on your expenses. Second, Ramp does have numerous discounting offering partners, including AWS Active, Slack, Notion, and SendGrid. In fact, they got so many incredible partnerships that every Ramp client has the potential to access up to $175,000 in partner rewards. So that's a lot of rewards. Of course, it is not necessarily likely that you'll get value with all of the credits and discounts from all of the vendors. But if you are a tech startup or any company that uses a lot of affiliated vendors, you can save thousands of dollars. Third, Ramp automatically finds savings for you. This is probably the main difference between other expense management platforms. Ramp goes through all of your subscriptions, unclaimed rewards, and help you find better rates for your plan. Ramp reports saving companies an average of 1.8% on top of the 1.5% cashback on every purchase. Again, your mileage may vary. It really just depends on the type of company that you run. Now, let's talk about the application process. Since this is a fintech company, there are many ways that they can underwrite you for a credit line. So there's no out and out list of requirements for getting approved, but Ramp has made a few things clear. First, you gotta be registered in the US. Simple enough. Sorry, Canada. Second, your business must be registered as a corporation or an LLC. Additionally, they also do need information from one corporate officer. And as a reminder, there is no credit check when applying. So if you're a sole proprietor, unfortunately, you're out of luck. Third, your business account has to contain a minimum of $250,000 to automatically get approved. Yeah. That's a high bar for most companies out there. But after talking to a Ramp representative, to even be considered for an account with their company, you need to have a minimum of $75,000 of liquid assets in a business bank account. So if you have anything less than $75K at the time of your application, you're automatically denied. Again, there's no credit check, so you can apply as many times as you want whenever you do have liquid assets over the minimum requirements. So if your liquid assets are under $250K, Ramp will dive a little bit deeper into your business. This can include the age of your business, financials, and any other business credit data that you have built. Once you've been approved for a Ramp account, your credit limit will be a percentage of your liquid assets that you have on hand. Now let's compare Ramp to other corporate solutions that also offer a corporate card. The first one on the list will be Divvy. This company is the one that's most similar to Ramp. So with Divvy, they do a soft inquiry. Even those inquiries do not have an effect on your personal credit score, but they do take a look at your credit profile to determine eligibility. The thing that I do like about Divvy more than Ramp is that they do have a robust mobile app. Even though Ramp does have mobile functions, which is receiving text messages and sending receipts to an email address, Divvy has a dedicated mobile platform. Additionally, with Divvy, it is more friendly with small businesses. If you're a sole prop, you can still sign up for Divvy and use their expense management platform. And also, if you're not qualified for the business line of credit, they will also allow you to build business credit using their platform for free. Meaning that whatever expense and statement balances that you pay off, they will report that information to the business credit bureaus on a monthly basis. The reward system is a little bit different as well. You can earn rewards as high as 7x back and as low as 1x back. So on the higher end of the spectrum, you can earn 7x on restaurants, 5x on hotels, 2x on recurring software subscriptions, and 1.5x on everything else. So if you are a sole prop business and you're also conscious about points, Divvy does definitely have the upper hand here. Now moving on to our next company, which is Torpago. This company is very similar to the previous two, where you get a credit line, expense management platform, and employee corporate cards. Like Divvy, you can apply if you're a US registered company, which includes sole props, LLCs, LLPs, and corporations. Now the barrier to entry for this company is a little bit higher, but you should have at least $15,000 of liquid assets in your business bank account. And they prefer someone who has been in the business for at least 1 year and make around $80K a year in revenue. On the reward end of the spectrum, this one has the lowest one out of the bunch, which only gives you 1% cash back on your spending. So here's the bottom line. If you have liquid assets of $75,000 or more, the Ramp may be the best solution for you because you get 1.5% cash back on everything, saving on software subscriptions, plus a robust expense management platform. But if you are a smaller company that doesn't have that much liquid assets, or is sole prop, it is best to look elsewhere, such as Divvy. So on the topic of business credit, if you want to know what are my 10 favorite soft pull business credit cards, check out my video over here.